Hello, everybody. Welcome to Financial Education Services, Protecting Your Future. This is a training, Leaders for Success. A little bit about me. My name is Dr. Renelda Bab Brown, and I am an independent consultant with FES. This training is geared for industries and people that work in these industries that require credit-worthy clients and/or have clients with damaged credit. So when you think of that, mortgage brokers, car dealerships, real estate agents, loan modification, debt settlement companies, bankruptcy attorneys, tax professionals, this is for you. Learn how to leverage the credit industry to create more transactions. So first two things, did you know 46% of real estate transaction problems were triggered by financing issues? 56% of all consumers have subprime credit scores. And today I'll teach you the solution to this dilemma. Personal financial affairs and statistics, we often only think of ourselves or our clients when we think of credit challenges, but these are facts that will never lie. About 43 million people have a 599 credit score or lower. Nearly half of Americans don't know their credit score, and an average debt is over $255,000, with many having less than $500 in their savings. And this is huge because, as we know, the lower your credit score, the more you're going to be paying in interest rates, the more you're going to spend over time. And everything is basically relied on credit to get a home, to rent, to purchase, refinancing, business credit. And most of our clients are waiting until they have to make a major purchase to not worry about their credit score. This is how your credit score is calculated. 35% goes into the payment history. So are you making on-time payments versus delinquencies? And they're checking on what you're doing in the last 24 months. Capacity and amount owed is 30%. The percentage of credit limits available. You want to keep your balances below 30%. I intentionally did that, and I saw my credit scores increase. 15% goes into the length of credit, how long you've had your accounts. 10% is based on new credit, so the number of inquiries and new accounts opened in the last 12 to 18 months. If you have 1, 2, or 3 inquiries, that's not bad. But if you're exceeding that amount, that tells another story of its own. Maybe you are thirsty for credit. And 10% builds into the types of credit used, installment loans versus revolving. Credit is infused in your life. Today, your credit score is like a vital sign. It's being monitored at all times. It can impact insurance premiums and interest rates. You can be denied the ability to rent, purchase, get a credit card, or even employment. Over the course of your lifetime, a less than an excellent credit rating could cost you over $200,000 to $1 million. $1 million. So that is huge. For low credit scores, you're definitely going to pay more, and you will see that shortly. There are 5 common myths about your credit. First of all, myth 1. Credit agencies are empowered with some kind of government authority. First of all, credit agencies have no legal authority at all. They are simply private companies who are in the business of selling credit information. They are not bureaus. TransUnion is owned by Goldman Sachs, look him up, and Experian is owned by a company in Dublin, Ireland. So that is so significant, because how is a foreign country controlling things and transactions that we have going on in the United States? Myth number 2. The credit agencies are required by law to keep derogatory items on your credit report for 7 to 10 years. There is no law that the credit agencies have to report anything on you at all. Credit agencies are required by law to automatically remove all derogatory items older than 7 years, or in the case of a bankruptcy, 10 years. That is so huge. Myth number 3, it is impossible to get a bankruptcy off. Bankruptcies come off just like any other derogatory item that is incorrectly reported, obsolete, erroneous, misleading, incomplete, or that cannot be verified. Remember, the nature of the item has nothing to do with its removal under the Fair Credit Reporting Act. Myth number 4, the information on your credit report cannot be changed. The opposite is true under the Fair Credit Reporting Act, which we leverage. Both the federal and various state laws require that items be removed if they are not 100% accurate or cannot be verified in a timely manner. So think about the spelling of your name, the exact balances, the date of purchase. If those things are inaccurate, these things need to be removed. Myth number 5. Is it illegal or immoral to have information on your credit report altered or removed? Not only is it not illegal or immoral, but it is what the Fair Credit Reporting Act is all about. It was enacted by Congress for the very purpose of protecting consumers from the intrusion of credit agencies into our lives. So you have to know how to fight for your rights and also leverage the 1971 Fair Credit Reporting Act. Listen, you can restore your score. The Fair Credit Reporting Act gives all consumers the right to dispute and/or investigate any item on their credit report. These items can be inaccurate, erroneous, and obsolete items such as late payments, charge-offs, foreclosures, bankruptcies, tax liens, collections, short sales, medical bills, and many other items can be removed from your credit file or can be updated to say paid as agreed, and that means a lot. Who likes paying extra for the same thing, my guy? Look at my guy's face. So, on this chart, the impact of a credit score on auto loans. So, you get a car, whether it's new or used, for $18,000. Based on your credit status of excellent, average, or poor, you can see your APR changes, your monthly payments changes, and the total cost of the loan. So if you have excellent credit, your APR is 2.77% to 3.77%. Your monthly payment ranges from $272, I'm just rounding it off to the nearest dollar, and $280. Your total cost of the loan from $18,000 could be, you're spending about $2,000 more, well, about $1,500 more, to about $2,000 more. If you have average credit, notice how the APR jumps. We're going to 4.46% to 8.56%. So your payment of that $18,000 vehicle is now $285 or $321. So now if you're looking at the total cost of the loan, now you're going to about $2,500, and then you're jumping to about $5,000 more. So your range in between there. And then let's look at our poor credit. APR is about 14% to 18%. Your payment has now gone from $368 or to $408. And the total cost of the loan is taking you about $7,500 more, around that, and going all the way to about $10,000 more. So it pays and it costs when you have less than excellent credit. Credit is a game that you didn't know you were playing, but don't worry, we are here to help you. The credit score hits us in almost every area of our finances. So I have Exhibit A and Exhibit B concerning Henry and Dolores. Henry has a 750, Dolores has a 630. If you're looking at their credit card, if the credit card has $7,000 on it, Henry's interest rate is 10%. Dolores is basically 30%. His monthly payment is $58 if we had to round it, and hers is $175. The lifetime payment, if they would just pay the minimum of the $7,000, he would have paid $21,000, where she would have paid about $63,000, and that's a difference of $42,000, and I'm rounding it to the nearest thousand. So that is huge. 630 is considered to be in a fair area. However, 750 is considered to take you in the great, excellent area. So awesome credit saves cash. It saves lives literally. Let's look at their insurance. Henry's at 750 a credit score. Dolores is at a 630 credit score. Their monthly payment for the insurance, Henry is paying $85 and Dolores is paying $150. So the lifetime payment for Henry for that same insurance package is about $31,000, where she's paying overall $54,000. So the difference for her is $23,400. That is insane. But if we write these things down, we'll see that if you have a less than excellent credit score, it pays. You're paying for that, where that money can go somewhere else. Credit scores impact three areas on a mortgage payment. First of all, PMI, which is private mortgage insurance, is risk-based, and the lower the score, the client may be forced to pay a PMI. PITI, which is principal and interest, taxes, and insurance, the interest is based on your credit score. The homeowner's insurance premium is based on the credit score. So as you are positioning yourself for excellent credit, you can go back now and renegotiate with your credit cards, with your PMI if you have that PTI, homeowner insurance premiums, your car insurance. You can go back and leverage to see if they can give you a lower rate. So let's do the math. Here we go. Henry with a 750, Dolores with a 630. They get the mortgage, a $325,000 home. Henry's interest rate is a 5.75. Dolores has a 7.625 interest rate. Henry's monthly payment is $1,897. Her payment is $2,300. The lifetime payment, he would have basically doubled, $682,000. Well, we rounded, it'll be $683,000 he would have paid. And she, oh my gosh, very close to $1 million, right? She has paid $828,000. That's a difference of $145,000, right? If we just round it. Let's look at mortgage too. They went and upgraded their house for a $475,000 house. Henry with his 750, his interest rate is 5.75. He's paying basically $2,000, $629, right? His lifetime payment is close to $1 million. It'll be $946,472.40. Dolores with her 630, her interest rate is at 7.625. Her mortgage payment is $3,352.02. Lifetime payment $1 million, 206, right? $727.20. She has paid about $260,000 and $255. That's how much she's paid. I mean, this is crazy. You can acquire properties, a multi-unit, based on this. And it's at a 630. And 630, some people consider 630 to be okay. 580 can get you a mortgage, but the lower the score, the more you pay. Your clients are depending on you to provide solutions to their home buying challenges, and let's do this together. So this will help you because as a mortgage professional or as a realtor, you want to sell your homes, but also you want to position your clients to win, not just get into the house and lose, not just get into the car and lose, but you want to position them to win. And this takes you out of the box of one area that you can impact people nationwide. So this is a training for leaders' success. So we leverage the United Credit Education Services, and this is basically how we do our credit restoration. We have almost a 15-year track record, close to 1 million derogatory items deleted from people's credit reports, tens of thousands of satisfied clients, a reading with the Better Business Bureau and accredited, and you will have a portal to monitor results. So here is a portal example of what it looks like. Our clients can go in and see their score, but there's progress reports, process reports, PDF to dispute letters, understanding your dispute letters. You're getting everything that you need, the credit education, establishing credit, debts and collections, and there is student and senior information. Here is the tracking service that our clients get, and you will get, that you can track your customer profile and see their progress report, what's in dispute, what has been deleted, how many on the original account, what's the new derogatory. So this is a snapshot of a portal that you would have access to, and also clients see what's going on. What our customers are saying. Remember, documentation beats conversation. So we have Johnny and Sandra Moeller from Dallas, Texas. They stated, after having our bankruptcy removed, we were able to purchase a home with a low fixed interest rate, which saved us almost $1,000 per month. And I'm thinking, what could I do with an extra $1,000 per month? Yvette Reed in Cherry Hill, New Jersey says, in just 2 months, my credit score increased to the point that my car insurance premium was lowered by $2,000 per year. Wow. Vinnie Ho from Westminster, California. After just 45 days, I had a tax lien and a foreclosure deleted from my credit reports. Now that's huge. So here's a comparison table. If you're looking from left to right, we have financial education services where we have credit restoration, we have the will, trust, power of attorney, credit monitoring, identity theft protection, debt elimination, and we have an income opportunity. So our clients can benefit from the credit services, but also the different financial services we have, and they can buy into the franchise where Lexington Law, Sky Blue, Credit Repair, Credit Saints, they can't compete. So FES is a whole 360, taking care of you financially, totally, health-wise, everything to make sure that you are financially literate and you gain your buying power back, which is huge. So all of these services is just a one-time $99 activation fee and $89 per month. $188 to start, and in 30 days, it'll be $89 a month for our protection plan members. And it's not just credit repair. You're getting all the other services that come with it. So let's take your business to another level and help as many clients as we can together. Surveys have revealed that nearly 80% of all consumer credit reports contain serious errors or mistake of some kind. So our process is highly effective in producing results that enable our customers to restore their good credit rating and achieve their financial goals. So we help improve their credit scores by challenging inaccurate, obsolete, or unverifiable information on their credit reports, or anything negative we can dispute to remove. Typically, clients see results in 4 to 6 months. However, results may vary. But if you're committed to the process and we're working together, we'll be able to change as many lives as we can. And my goal is to impact 50 lives this month. So please contact me. My name is Dr. Renelda Babb, Brown, 704-231-0852. You can also reach me at www.reneldabab.com, my website, or simply go to the person that invited you to listen to this webinar in the